Anthony and Tony, that is right. I have Peter Rentschler here with us this morning. He's the CEO of Metafora. Peter, how are you doing?
I'm great. It's nice to meet you for the first time, Sydney. I've been anxiously awaiting the first time we get to be on camera together.
Perfect. Well, this is great then. Now, I know we're talking about M&A drivers and transportation and logistics. Maybe let's start with record earnings. Can we start with that?
Yeah, sure. So, I mean, it's been interesting. I mean, you really can't go into an industry conversation today without talking about M&A. Everyone, like, there are hundreds of private equity firms looking to make investments in the space. There are a lot of strategics that are making acquisitions, companies like Redwood Logistics and C.H. Robinson, and obviously the big deal was the Uber Freight Transplace one. But really what we're seeing is that there are a lot of companies that are trying to capitalize on really strong performance over the last 18 months. And, financials look good. And so, record earnings means that there are businesses that look really strong and they want to capitalize on kind of selling at the peak. It also means that companies that have operated well and stacked cash have treasure chests that they can deploy to buy companies and expand into new service offerings or capabilities.
Good morning. When looking at certain strategic merger and acquisition stances, you mentioned it a little bit, being able to sell at the peak here. When you're looking forward at, potentially the next phase within supply chain and transportation, what kind of mindset do some companies need to take into mind when they're thinking about making some of these purchases of we're heading into a different trend or to a different type of market? What's going to be some of the mindsets of saying, hey, maybe I should do an acquisition of somewhere I've been lacking or maybe a competitive landscape? What's your thoughts around that?
Yeah, and it's a great question, Anthony. And typical consultant response is it totally depends on the business. But I could kind of summarize it into, it depends on the size and stage of the business, right? Like someone like Uber Freight acquired Transplace for a few reasons. One, it's really their first path to profitability, as y'all. FreightWaves reported on earlier this week. Second, it also gives them a whole new managed transportation capability, which Transplace has built a brand around for the last, call it, 10 or so years, which is a capability that Uber Freight didn't have. So I think that's a really good example of where, listening to what your customers' needs and demands are, and then looking at acquisitions to allow you to better serve your customers by offering expanded capabilities. Another area, we're seeing a ton of kind of traditional truckload, over-the-road freight brokers and 3PLs that are starting to expand into more of a managed transportation capability because they've basically converted contracted freight lanes into actual true managed transportation. And as a result, those businesses need an LTL footprint. So they're starting to look at acquisitions for LTL capabilities. So I think those are just a couple of examples. The last one that I would just use is customer diversification can be another big reason to do an acquisition. If there's another business that looks similar to yours, but maybe you're focused on food and beverage, and there's a kind of peer or a competitor that's focused on consumer packaged goods, like that could be a good way for you to diversify your customer footprint as we think about what will probably be kind of a turbulent transportation market for the next couple, the next few months, really, if not the next year or two. That customer diversification can make a big difference in terms of being able to weather the storm of rates environment.
Now, if we get into some supply chain concerns, I know we're hearing the word visibility a lot. We want to see some transparency in the industry.
Yeah, so on the supply chain kind of visibility side, as you think about that for a driver of M&A, I mean that's where another one is new technology capabilities. So I mean it's pretty incredible. And given we've been doing a lot of M&A work around helping with diligence and helping with strategy and even with companies think about how they source potential acquisition targets. And I mean, it's been really impressive seeing kind of these middle market businesses that have actually that have done a really good job of kind of stitching together off the shelf technology from companies like McLeod or TMW or Turvo, coupled with like a Project 44 or a MacroPoint for visibility, and then maybe like a green screens for rating, and then what ends up happening is then they build some proprietary differentiating technology on top of that. One of the areas I've seen is actually specifically in supply chain visibility. I've seen a couple. We've seen a couple kind of middle market freight brokers that typically would have just had an off-the-shelf TMS that have actually built some pretty unique software that allows them to work with multiple visibility providers to ultimately create a great kind of customer experience. And like those are the businesses that are trading hands for a couple more turns of EBITDA. I mean, that's how you think about driving the value of your business as you think about potentially selling.
And Peter, when I kind of go back to my consulting days, I think of times when economic or industry times are really well. You can really cover up a lot of potential mistakes that you might be making, potentially get a little bit lazy in certain areas and just really enjoy some of the gains. Now, as we kind of potentially transition into a different market here, that efficiency is going to be really one of those areas that we have to hone in on for a lot of places. What are some of the areas that businesses are looking to really kind of minimize some of their disruptions, or some of the areas that they could really kind of take into practice to really make sure that they are being more efficient, that they are minimizing their disruptions? I know some shippers are trying to do just in case instead of just in time, and sometimes that could be a little bit inefficient as well.
Yeah, it's a great question, and there's actually something that you touched on is just around kind of like the economic impact as you're looking at businesses. And I do just want to give kind of a cautionary tale that, I mean, we've looked at companies whose financial performance looks very strong over the last, call it 18 months. But when you start to dig into the numbers, it turns out that they've basically, volume's relatively flat, but revenue is up, 50 to 80% year over year. And as a result, gross margin and profitability is up significantly too. I mean, the point is just to be very intentional and careful about how you're evaluating the performance of these businesses. Because Anthony, to your point, we are kind of coming out of an economic, of a really strong freight market that right or wrong, has certainly given some businesses stronger financial performance than they probably would have had otherwise. That being said, specific areas to look at as you think about kind of navigating and optimizing your business. We talk a lot about offshoring. We have a really strong partnership with Lean Staffing, where we help them work with their customers to help identify areas where they can optimize their teams. And again, the point is not about cutting internal headcount and shipping jobs overseas. It's about, hey, at your business, you're probably trying to hire 10, 20, 50, 100, 300 team members. Like, where are there current people that fit your company culture and vision, that know your business, that are doing kind of non-value add jobs? And then let's move those to Colombia or offshore or nearshore, to kind of drive operational and cost efficiency, and then reallocate those team members to the open positions that you have, where they're higher value add, and develop your team. I mean, those are, I think that's one big area. And then the other is really looking at where can you drive automation. We're doing so much work around technology visioning and road mapping, and I'm constantly amazed. It seems like every week there's a new freight tech company that tackles another problem in the space that enables a middle market freight broker or fleet to compete with the big companies. And those opportunities just didn't exist years ago. And so, I would really encourage leaders to take a close look at kind of where you want your business to be 3 to 5 years from now, and then really think about what technology enables you to get there, and how do you drive productivity at the business by really leveraging automation and technology, and that's a big part of what we do, and something we're getting a lot of traction with right now.
Peter, it's great to have you on the show. For any more information, where can people find you?
Yeah, thanks for asking, Sydney. So we're on LinkedIn. We're also at our website's metafora.net, metafora.net, and LinkedIn. And then my email and contact info is also on our website and on my LinkedIn. So look out for us there.
Awesome, Peter. It's always great having you on. Will we be seeing you in Arkansas?
I unfortunately will not be in Arkansas. I know, I'm not happy about it. I had a conflict that I've been trying to move it. There are a few folks from my team, Ryan Schreiber, Rush Feldhacker, and Nick Oliver are going to be there, so we will definitely be well represented. Unfortunately, I'll have to take a rain check, and I've already put a very strong hold and already scheduled meetings around the November F3 event. So I'll make sure to be there, and I'll be sending good vibes, and we'll be chiming in remotely as much as I can.
Awesome. Well, we're looking forward to having the Metafora represented there at our Arkansas event. Looking forward to it, and we'll chat with you again shortly here.
Yeah. Thanks, y'all. Have a nice day.